because I got that mad cheddar. Bitches and Bitcoin go so good together. Make it rain with Bitcoin cause I like it way better.
Welcome to Crypto Mama channel. Today we are learning how to use the Sunday candle to enter into a trade. Last week I posted a setup on Facebook on how to use the Sunday candle to catch a trade, but I didn't explain the logic behind it. So in today's video, I'll be explaining how to use the Sunday candle to enter into a trade and the logic behind the setup I posted on Facebook on Sunday. So let's get straight into the video. So when you look at any trading candle, candle, there are four things that every candle has. Every candle has an opening, it has a low, it has a close, and it has a high. Sometimes there are some candles, maybe the high and the close will be the same, and the opening and the low will be the same. That is when you have a very full bullish candle without even a retracement. But most of the time, 90% of the time, this is how the shape of a candle is going to look like. So when it is Sunday, what you want to do is that you want to go into your hourly chart and do what? And mark the opening Sunday candle. Then you wait when the market starts trading. You most definitely, what you will see is that the market will trade lower first. When you expect the market to go bullish, it will trade lower first. And in the process of trading lower, this is when the wick is created. And during the wick creation, the market will trade to either one of these items. Either it will trade and stop an order block before going to the overall direction, or to balance an inefficiency before going to the bullish direction you anticipated, or it will fill in a gap before going bullish, or it will hand stop losses below an old low in something like a lower time frame, like the 5 minutes time frame, before going in your overall direction. When you come to a bearish scenario, you expect similar situation to happen. And to first trade to the upside, so you mark your opening here, the candle will first trade to the upside, and in the process of trading to the upside, it will stop at one of these four items other than an order block. So when the market is trading to the upside, you want to come to your chart and look for order blocks, inefficiencies, gaps, and an old highs where the market will hand stops. So most of the time you will not find all this, but you find either one or two. So you want to mark out those regions and wait for the market to trade to them. And after the market has traded to them, you are not taking trade just like that. That's the first confirmation. The market has traded to an area of interest. And the next thing is that you want the market to trade back below the opening of the Sunday candle before you take your trade, or before you even start looking for entries. So let's go straight into the chart and see practically how I apply this concept to trade this week, which I was able to make 12% of my capital. So when this week started, I marked out this candle. Let me zoom it out for you to see. I marked out this candle. You see this candle? You see this doji was created on Friday, 28th October. And this candle was on Sunday, 30th October. So this candle opened here. So you can see from this here to here, the market gapped down and opened here and traded up. So from here to here, there was a gap. So basically, expect the market to fill in that gap. The market did what? The market actually filled in the gap. Then the next thing, that was your first confirmation. The market filled in the gap. The next one was you expect the market to do what? Trade back below the opening. And the market traded below the opening at this time. And the next thing you expect the market to do is shift in momentum. That is, you expect the market to shift this candle This candle closed below this low. So that was a confirmation. So when this incident happened, I was not in the market around this time. So the market traded all the way down. I was not in the market. So I marked this area. I knew that the market could come back and retest the opening of the Sunday candle. So I marked out that area. So when the market came back and retested it and rejected, what I actually did was to go back to my 1 minute chart. Yes, 1 minute chart. I use the 1 minute chart for entry, but not always. But in this particular trade, it was the 1 minute chart I used for my entry. So I went to the 1 minute chart and I waited for a market structure shift before taking the trade. And the trade I took was, it was 1:5 risk to reward, and I actually closed that trade around here. So after I closed that trade, that was on Tuesday, I was done for the week. I didn't even expect to get another trade again. So I was not looking at the chart until the next day when I opened the chart and I saw that the market was trading above this high, and the market didn't actually close above it. The market wicked above it and closed back in. So what actually was happening here is that, when I went short here, and any trader, or those any logically, any trader who goes short here will have their stop losses above here. So what the market actually came was to take out those stop losses for more liquidity, grab more fuel to get to our weekly target are marked in the setup. So when the market closed in below this range, I marked out this order block here. You see this last up candle. Mark out this order block, and I was expecting the market would trade back to the order block. Then I'll take my trade, and my stop loss was above this high. So this was where I took my trade. My stop loss was above this high, and that particular trade was 1:7 risk to reward. So basically, when you are using the Sunday candle, there are three things you need to do. First, you need to look out for, or let me say, there are four things you need to do. First, you need to look out for, or you need to mark the opening of the Sunday candle. That's the first thing. The second thing is look out for areas the market will trade to in the opposite direction before going in your anticipated main direction. And the areas is either one of the four things I marked out here. That is an order block, an efficiency area, and a gap or an old low to hand stop losses. So after the market has filled in the gap, as in this case, that's the second confirmation. So it could have been an order block, or it could have been hunting stop losses. So, but in this case, it was filling in the gap. So that was our second confirmation. The third one was waiting for the market to trade below the opening of the Sunday candle again. That was the third confirmation you need to look out for. And the fourth confirmation you need to look out for is wait until the market structure shifts bearish, or shifts in the direction you anticipate the market to go to. Then when all these things is in order, then you can start looking for entries. So this is basically how you use a Sunday candle to take a trade. So Sunday, when the market opens again, I'll mark out the hourly candle, and I'll explain how you can use that same process, repeat that same process to take a trade next week. So thank you for watching this video. I will see you again on Sunday when the market opens.